Welcome to the Treasury Update podcast, presented by Strategic Treasurer, your source for interesting Treasury news, analysis, and insights in your car, at the gym, or wherever you decide to tune in.
The Office of the CFO and the Office of the Treasurer have significant challenges and requirements to deliver value to the organization. Great insights, analysis, and visibility require data that is accurate, current, and detailed. This by itself will not allow an organization to achieve full success. The finance team must have a well-architected data ecosystem. In this podcast, we will discuss the issues surrounding data. We'll explore the main aspects of architecting the data solution that provides the framework for success in the era of AI and machine learning, rapidly expanding data sets, and changing data connections or formats. Welcome to the Treasury Update podcast. I'm Craig Jeffery, your host for this episode. The episode is entitled Architecting Your Data Ecosystem, and I'm joined by two people from Treasury4, Randy DeVita and Ed Barrie. Welcome to the podcast.
Thank you, Craig. Glad to be here.
Yeah, thanks for having us.
Well, let's start out with the issue of architecting your data ecosystem. I mean, we're talking finance, and we tend to think about financial information, but now we're talking about data and an ecosystem. So what is the issue? I know we talked a little bit ahead of time about data tends to be in many, many different places in different structures. Maybe, Ed, you could start us off with what is the issue that has to be solved?
Well, I think, Craig, the issue that has to be solved is that really not just Treasury, but the broader finance teams deal with a lot of applications and a lot of service providers. And data sits across every one of those. And I think there's a little bit of a misperception that all data sits in an ERP system, when that is a key component, but it's not the only source of data. And what we see is a proliferation of SaaS-based applications that finance teams are using beyond the ERP. So applications for financial planning and analysis, month-end close and reconciliation, expense management, travel management, foreign exchange trading, investment accounting, merchant processing, corporate card programs. All of that data is sitting in different systems. And how do you bring it together? And importantly, what data is just sitting in spreadsheets or sitting in someone's head? And how do you bring that together? And how do you derive more value for your organization by really architecting a comprehensive vision and strategy around managing that data, organizing it, and leveraging it for whatever your use cases are? And principally, one of the biggest use cases is around cash flow forecasting. How do you get more data into your view so you have a more precision-based cash flow forecast? And how do you stand that on the right definition of entities, currencies, the way you're labeling that cash flow data so it aligns to your statement of cash flows? And that's the big challenge for many, many organizations.
You know, as you started talking about that, I was mindful of one of the phrases that's common, a single version of truth. And then maybe some people say a single source of truth. So just a few thoughts. Tell me if this is right, or if you would change how I phrase this. So there would be multiple sources of truth, not a single source of truth. And instead of a single source of where the data is, there might be multiple sources of data. And what you're proposing is there's a bit more architecture around where is the data that you can access.
I don't know that it's necessarily achievable to have a single source of truth, because you have so many different systems. Each system effectively is a system of record, whether it's an ERP, investment accounting, investment custody, merchant processing, all of those are systems of record. How do you integrate that data and then be able to leverage it for analytics and insight? You have multiple systems and sources of truth, but it's about bringing it together to get more value for your organization. And I think it really starts with documenting, what do you have? What does your ecosystem look like? What are all the different applications that your organization is using internally, externally? Who are your partners? And then what data are people tracking, or does need to be tracked in spreadsheets or that you'd like to track? And then how do you start bringing that together so you can tap into that for the organization?
Nice. So I like you bringing in the book of record concept, the accounting book of record, the cash book of record. You could add the investment book of record and maybe even the entity hierarchy book of record. So, as we continue that conversation about the data and architecting the data solution, what's really necessary here? There's certainly structural elements of it. There's different sources of data. How do you advise companies to structure and architect the solution, and what are the components of it?
Yeah, I think one of the areas that we start with our customers is really creating a schematic of all the systems that they're currently using and documenting those, documenting in the Treasury perspective, who are their banking partners, investment custody partners, other partners that Treasury is using, but also the broader finance function. What are the different books of record or system of record? And then how does that data integrate? What data needs to go from one system to another for either reporting only to get greater use out of it, or reporting plus updating that data? I think an example of that would be you might be generating your accounts receivable invoices from your ERP system, but then you might be feeding that into a collection system that you're using to manage that workflow, and then you're creating data on top of that data. That's a common use case that we see. And so how do we want to document and help our customers know their systems, know their data, what is the interconnect, and what can be leveraged for different use cases and reporting needs? And I really think it starts with documenting that, which doesn't have to be a big exercise. It can be done in 30 minutes, an hour or so. It doesn't have to take days. And then start with that, and then drive towards, what data do we want to solve which use cases? And how am I going to leverage that? Including, at the end of the day, I always think about every single financial transaction that's happening in these different books and records ultimately needs to end up in the general ledger in one way or another. And so if you kind of start with that, where things are feeding into that ERP or moving in that direction, then you can start coming up with, how are we going to leverage the data at the transaction level to drive insights or other use cases for our organization.
If data is moving into the accounting book of record or the ERP, and there's other sources of truth and information that are necessary, a number of companies are taking advantage of data lakes. They're putting data from these multiple systems, the ERP, spreadsheets you mentioned, external data. They're also leveraging data lakes and putting information there. How would you help us think about companies that may or may not be using data lakes?
Yeah, I think that's a great question there. And what we see is we do have customers that don't have a data lake, and we have customers that have a data lake. And what they're doing with their data lake is pushing more and more data into that, whether it's their ERP, FP&A systems, purchase order, sales order systems, CRM systems. And then what they're starting to ask for with other service providers, other systems that they're using, including Treasury4, is can you push your data into our data lake? And we do support that. We have customers that do that. And what principally we see that a lot on, as an example, Snowflake, and where we push our customers' data into their corporate instance of Snowflake. And that really empowers the organization. They're still getting value added from whatever the book of record is, which may be having its own transaction processing, connectivity and integrations, but they can bring that in more efficiently into their internal corporate data lake or data warehouse, however you want to call it.
Could you give us a quick definition of Snowflake, since that's like Saran wrap in a way?
Yeah, Snowflake is it's a cloud data warehouse, effectively, or cloud data lake. It's one of the most widely used ones out there. There's others. Microsoft has products, Databricks, Amazon. But I'd say what we've seen is a lot of our customers using Snowflake as their internal corporate data lake or data warehouse. And then they appreciate the ability for us to push the data that they're either managing in Treasury4 or that we're getting on their behalf from like their banking partners. And then we're enriching it, reconciling it, and then being able to push all of that. And that really empowers them to drive whatever analytics or other use cases they need for their organization.
This is probably a good time in the podcast to do a quick introduction. Maybe, Randy, you could just describe a little bit about you and your role at Treasury4, and then we'll do the same thing with Ed, and maybe you could also just give us a quick overview of Treasury4.
I'm Randy DeVita. I'm at Treasury4. I'm the Vice President of Customer Success. I've been here for over 3 years now. And my role and the team's role is to work with our new customers to get onboarded onto the platform rapidly and achieve value. But also, what's been nice is I work on an ongoing basis with our existing customers to keep unlocking value. My background is over 20 years experience working on the delivery side for Treasury solutions at a variety of vendors like Kyriba and G-Treasury and others. So really excited to be part of the team at Treasury4, where I think we're building new technology, new solutions for, to some degree, some of the same challenges that I've seen customers wrestle with in the past.
Did we first meet about 15 years ago, or was it more than that? Was it 20?
It was towards the beginning of my career. Yeah, it's been a few days.
Yeah, it's hard to keep track of that. Well, thank you for that. Ed, maybe you could describe your role at Treasury4.
Sure, yeah. So Ed Barrie, my role here is our Chief Product Officer, and I set our overall vision, strategy, and roadmap. I wrestle with Randy on our features and priorities and when we're going to deliver them, and we want to make sure that we have a great communication and understanding what our customers need and what creates value for them. My background is over 20 years as a Treasury practitioner. I spent 7 years at Microsoft under George Zinn. It was a tremendous experience there. I went on to Itron, a global leader in the smart meter, smart grid space, where I worked under Steve Helmbrecht, who's now Treasury4's president and CEO. After Itron, I went to Tableau Software to serve as their treasurer. Tableau was acquired by Salesforce in 2019, and I spent 2 years in the capital markets group at Salesforce, leading strategic initiatives and managing that integration of Tableau into Salesforce. So I got to see both being, from a treasury perspective, being an acquirer and being acquired, and seeing those two perspectives. And so just being able to bring all that experience into what we're doing here to support our customers.
Did we first meet around the time of Swift corporate workshops that we were
Yes.
doing, or was it the Treasury and Risk, one of their conferences? I'm trying to remember. It was a while ago.
It was, I think, one of the Swift corporate workshops, and if I remember correctly, it was at a hotel near Times Square on a cold and sunny February day in New York.
Ed, could you give us the 20 to 30 second overview on Treasury4?
Treasury4 is a data-driven treasury management system where we are looking to integrate not only data and additional adjacent data on behalf of our customers, but stand that on a foundation of legal entity management. Our capabilities include cash management, cash forecasting, payments management, and we're looking at other solutions beyond that and capabilities. But at the end of the day, Treasury4 is really a data aggregation platform, and then we expose all of that data for our customers to access in however they choose to access that, including pre-built dashboards and analytics, our own customer-created dashboards and analytics, and feeding data to customers' own internal data lake platforms.
Excellent. As you mentioned, standing that on the entity hierarchy or entity as a foundational component. Hopefully some of that might come out in our discussions as we move forward. But thank you for your individual intros and for some background on Treasury4. I think that's helpful for people who are listening, just to know who's talking to them. Randy, I want to get you in on some answers here too. I'm going to ask you even harder questions. As we look at that concept or talk through architecting the data solution, there is a lot of transactional information that goes with structural information. Structural data, would be like entity, other dimensions of it. How should we think about architecting the data solution in light of artificial intelligence and machine learning? And maybe you could start us off on that with building the thoughts up in our head.
It's a good question, and it's actually the foundation of it, Craig, is really what I and our team focus on is how can our customer get value from the system? How can they use the information there, right? So really when we think about structuring the data, we're trying to get to an end state where it's data they can use. So there's a few things that I think we focus on, and I think it's almost sequential. One, we really focus on trying to automate as much as possible, or near time automate getting data. You want to get as much data as possible. And part of it is just getting the connections to banks and to systems and sources to integrate that data, but also part of the as you know, depending on the method of connecting to some of these sources, it's going to drive the type of data you get. So you want to be selective. Some of the APIs we find are, if I use the term, it's have quite an attractive payload, right? So it's the payload that we'll get from some of the banks is great via API, and that's going to help drive upstream how we can use the data. But the main thing is to start automating to get the data. But once you have the data, the other thing that we think about, and it's part of the system and a framework, is trying to enrich the data. So not having data isn't enough. You want to enrich the data in order to give it context, and the context allows you to tell a story in some way about what you have and what it means. So then we have sort of a framework in our solution that not only are we integrating this data, but we're tagging the data in a way that structures it not just to say, hey, it belongs to this entity, but also all the way down from a cash flow class down to a GL. Where does it fall? So we try to focus on collecting that data and enriching it. And I'd say last is not only you want to automate getting the data and enriching it, but you want to be able to have the flexibility to adjust the data in some way. So the idea is there might be some data that you would consider to be an outlier. You don't want to include that in a forecast, or you don't want it to impact the machine learning and the models. So we want to have the ability to change the categories, flag things as being excluded from the models, so that once you have machine learning applying some coherence around the data, you've got a large set of data which is extremely rich, has some framework around it, and you've kind of excluded some of the edges. The last thing I would say, not to be long-winded, is I think it's important. We're finding it's important. It's not just enough to collect the data, to enrich it, and to even adjust it in some way so you can consume it. Our customers ask for ways to measure it. How well are these calculations compared to what they should be? So you want to be able to give some sort of report back or scorecard on how well are some of the models returning the information that you actually ingest.
You talked about collecting, and there was a speed element of that, the latency, how quickly you can get that. And certain data obviously is very timely, and others may not be as important. And you talked about enriching. You said adding other data. So this is like adding other structural data so you can then query it. Is it expanding it?
It might be a little bit of both. I think it's a way of saying we want to take the underlying data, the core data itself, leave it unchanged, but we'd like to augment it. We'd like to give it some framework or some definition to say this particular, to use a simple example or particular example, this cash transaction that came in from the bank that happened to be an ACH has the dimension of its AP. What kind of AP is it? It's a supplier payment. For which supplier? It's got this GL. So putting the dimensions or tagging transactions with multiple tags that have, I guess, a framework all the way from a class, very, very high level, all the way down to the GL. So trying to enforce some degree of granularity so that you can sort of report on it. So what we see is important is not just applying one categories, but applying multiple categories that are inside a framework that actually helps in a company say cash is moving, balances are changing. So how you tag the transactions tells the story about why the balances are changing for the entity or for the account.
Yeah, I think the idea of data enrichment is taking this initial payload, adding more to it to get more value. In the case of cash management, it's transaction categorization, and every treasury management system has a concept of transaction categorization. And I think one of the things that we do differently is put it within a framework that aligns to the statement of cash flows. So at the end of the day, every transaction that has to roll up under one of three categories: operating, investing, or financing cash flow. Under that, you can have your cash flow type, your major type, cash flow subtype, GL, etc. But you want to align it to the statement of cash flows because for multiple reasons. One is, think about your stakeholders. What does the CFO really care about? And they care about what's my operating cash flow and what's my free cash flow. While a treasury manager, a cash manager, is how much cash do I need in this entity by this date to fund them, or in this account. So you have different stakeholders doing different things, and of course every transaction has to be reconciled. But to your starting question, Craig, around how does that tie into artificial intelligence and machine learning, the idea is that by adding this business definition around all those transactions, then you can leverage that through these technologies of AI and ML to fill in the gray space of what you think is going to happen in the future because you don't know everything. You don't know what your AP is 13 weeks from now. You don't know what your AR is. You might have some level of idea, but how do I extrapolate that? Everything that I know, everything that's happened, and how can I have a reliability around that and leverage the software to drive that, and then break it down into understanding how it's coming up with that estimate or that forecast. And so the idea is, to get better use of AI and ML, you have to do something, create a library of this definition and normalizing your data, and then leverage the software technology to then drive the insights that you're looking for.
And would an example be with the accounting that you two had mentioned? It's like data comes in from the bank. It has a code that tells you what it is. Maybe it's associated with that entity. There's an accounting, a general ledger string that hangs off on that. And then you can use that for additional analysis, or is it?
Yeah, additional analysis, because I want to be able to forecast. It's not just forecast, as an example, my payroll, but my payroll forecast is really what's my estimated forecasted net payroll taxes, maybe 401k benefits. I mean, there's different components of payroll, and then being able to look at that on forecast that on a go-forward basis. But what you see in the payload from the bank might just say payroll debit, right? So, but yet you want to be able to break it down or add these additional dimensions to it, and then leverage the use of machine learning or AI to help with that, improve that forecasting and drive more precision around it.
Well, our discussion has kind of moved into the other question area that I had. It was really getting into practical examples and this is really for both of you. So one area that I wanted to ask about is, we've heard the phrase, the devil's in the details, right? If everything's summarized, you can't forecast very well because it's so aggregated. But that's different, right? So why does the level of how granular the data is matter for the treasurer or the CFO?
Yeah, it's Craig, another great question. So if we kind of look at as an example, let's just take an example of your AP processes, and your AP process might generate a payment file out that you transmit to the bank containing 1 to 1,000 payments in there. And those payments are a mixture of supplier payments. Some of those payments are operating expenses. Some might be capital expenses. Some could be tax payments. And yet on the bank statement, you might just see a net debit for all of those payments in that batch. So when you categorize that transaction, you're just saying, well, this is AP. So I have no further insight into it because it's just this bulk number. But if you actually have all the individual payments, now you can categorize those and say, okay, these are cash flow from operations and their AP and their supplier payments. This is cash flow from investing because it's capital expenditures. I bought property, plant, or equipment, and then now I can use that definition to then drive a real-time view of my operating cash flow and free cash flow. One of the biggest challenges and things that we hear from other treasurers is I need better insight, right? If I have this transaction that is being reported and it's just on a net bulk basis, and I don't have the underlying detail, it's hard to make sense of that. A corollary of that would be if you're taking payment through merchant processing. So I'm using a merchant processor, getting all these payments that from my customers they're paying on cards. In my bank account, I see a net settlement. Well, what makes up that net settlement? It's almost like a semi-truck backing up to your bank account, depositing a pile of money, and yet I don't have the manifest. If you have the underlying transactions that were occurring on the merchant processor, now I have the manifest. I can start breaking it out and say, well, here's all my payments, here's my disputes, here's my refunds, and then here's my fees, interchange or otherwise. Now I can understand all those discrete cost components or revenue components, and then I can tie it to this net deposit that's hitting my bank account. And now I want to be able to leverage that granularity into my forecasting. Now I can start doing a forecast around what is my interchange, what is my cost to process, what is my expected dispute amounts or refund amounts. And I can start getting a level of granularity that I've never had before when I'm taking this data and just bringing it into a spreadsheet, or I'm purely using what I see reported on the bank statement.
Your example of, you say 1 to 1,000 payments. So let's say you send, AP sends out a ACH file with 1,000 payments. There's a lot of detail that sits behind each of those individual 1,000 items. What would come back from the bank is going to be a single debit, from the bank's perspective, a single debit on the account, masking all of the detail. But if you can associate it back to that other detail, and maybe there's, volumes or percentages that are related to this type of spend or that type of spend or these cash flows, then when there's changes or you're making assumptions, you would have the right level of detail that's from the 1,000 that you wouldn't see coming from the bank, for example.
That's correct. That's absolutely correct.
What I see that's interesting specific to that, and that's a change, is just in terms of when we talk about getting the data and the mode of getting the data. For some banks, we find with an API, the payload is different than a traditional BAI or 940 payload. And the payload is rich enough that actually underneath the batch level detail for the batch of the AP payment for ACH is all the details. And so we suddenly find, like, if we connect to the bank using this mode, we've got actually the richness of the detail to actually start to break some of this stuff out as well. So to me, that's been a change compared to what you would see traditionally, which would be you'll get the one ACH and that's the end of it.
So you've used the term enrichment and rich data. So that's seems like you're being pretty consistent there. Randy, maybe you could talk about transaction mapping as one of the practical examples. Like everything that runs through Treasury, there's transactions that are recorded from an accounting standpoint and are probably useful for other things like forecasting as well.
What we see our customers using the system to do, and it's been pretty consistent through my career, is they want to integrate the data from banks, and the bank details, the payloads are pretty structured. Here is the account that's being debited or credited. Here's the amount. Here's the date. There'll also be some sort of bank transaction code. There's references in there. There's also transaction detail. And then increasingly we see maybe a richer payload. The system, Treasury4, one of the things that we'll do is we'll deploy the solution with these business rules predefined. So when one of our customers starts, it's not that they're building rules. They're starting with hundreds of rules that we've already predefined, where we're saying if this transaction has a particular code or contains some text in the transaction detail, tag it this way. If it has something different, like a bank fee, I'd like you to tag it this way. And we can say this is an account analysis fee as opposed to maybe a monthly service charge from the bank. So we can become really nuanced based on default details that come in from the bank and use that for reporting. The rules are predefined, but then one of the things that we'll go through with customers is we'll talk about this is the framework for how we see generically customers categorize their data, but what is the framework that you use to classify data through your organization, so that from FP&A through accounting and treasury, everybody's looking at the transaction activity using, for lack of a better word, like a common language. So the categorization, one of the things is not just to build the rules, but to agree on, well, what should the categories be, and then have those rules applied in an automated way and really manage exceptions so that the rules are running each time automatically as data is integrating. And somebody might say, well, this is a new transaction, and it's just the exception for which they either manually can tag it or build a new rule for it.
A little earlier, we spoke more generally about AI and machine learning. And one of the powers of machine learning is detecting patterns, being able to sift through data far faster than people can, or people can run it through Excel. I think you have at least one example for pattern detection. I'd love to hear that.
I'll start with, and maybe Ed, you can jump in as well, but one of the things that we see is when you classify data, part of what you're answering or striving to answer for machine learning is what is this? How should I classify this? But with machine learning, as you say, it's much faster at sort of detecting patterns. And one of the patterns that's important to customers, not just what, but when is this? When would I predict this is going to happen? So if I manage to categorize a transaction with sufficient detail, I'm able to see that, okay, my AP activity is relatively symmetrical, but my payroll isn't. And it happens at a certain time each month or every few weeks, or maybe it varies from entity to entity or country to country. So what we see with these categories and using machine learning is we're able to, the solution is able to pick up the patterns in terms of when things are expected to happen, not just what they are.
The patterns of when, right? Would that include things like, you can certainly have bank holidays programmed into a system, and then you still have to make adjustments. Is this being paid? Are we receiving that beforehand or after the fact? How advanced does this get?
I think we're probably as a people a little hesitant to be fully autonomous treasury. But how can I surface up the data to give me the right insights so I have more comfort in what I'm doing? And whether it's like the holiday calendar example, and maybe you have business rules that say, well, pay before or after the business day before or business day after. And so I think as we get more comfort with it, then we get into a little bit more autonomous use of machine learning and AI. But I think more prescriptively, what users want is the ability to look for those patterns. I'll give two quick examples. When I was at Tableau, and we made payments out of both our manual payments and the payment templates in the online banking portal and through AP payments from our ERP system, we would put a 6-character code effectively to drive categorization. AP for accounts payable, CBWP for cross-border wire payment. And I would pick that up when the bank statement came in, and that was my category. But what would happen with the banking data is you would see up to 9, 10 permutations of that 6 characters, spaces, A, space, P, CBWP, or any combination, sometimes commas in there. So you're never quite sure, but yet they were all the same, right? So that's a great example of just machine learning. Once it sees the pattern, okay, now I know, regardless of spaces, regardless of commas, it's there. But I think even more, prescriptively and benefiting to customers is picking up the patterns in the payload, especially in semi-structured payload at the bank transaction detail. So a good example of that is I make a payment in a currency different than the account currency, and the bank is doing an embedded foreign exchange spot transaction. We actually did a study of this at Itron. If we could capture the transaction currency code, the transaction currency amount, the FX booking rate from the bank, and we could break that out into those pieces, we could actually feed that into the bank-to-book reconciliation module of the general ledger system and automate the calculation of gain-loss. And it actually saved about 20 minutes of people time by doing that. Because otherwise, when it's manually reconciled, someone has to calculate the rate. They might book it inversely, and then when they're booking a manual journal entry, then a supervisor has to approve the journal entry along with supporting documents before it posts to the GL. But when you're using machine learning to pick up that pattern of how that data is represented, and you can feed it into a system, now you've completely automated and freed up people from doing manual work. And I think those are really some really tangible use cases that organizations are looking for to drive automation, improve their financial reporting and controls and reconciliation, and drive insights. Because you may then, as a cash manager, say, how many transactions did I do in a currency other than this bank account currency? What was the notional value over a period of time? Maybe there's better ways to manage that if I open a bank account in that currency and process those payments out of it, and I can manage the FX funding a little bit more efficiently. It opens up a lot of opportunities in identifying the patterns and how you use the data coming out of that.
Yeah, thanks for that, Ed. Maybe we can touch on another use case or two. Maybe you could give an example and describe how those issues can be solved or better handled.
Sure. I think another example, Craig, is corporate card transaction activity. And most organizations have an expense management system. You're feeding your card transaction data in, users are going in to add data, reconcile their transaction activity. What we discovered at Tableau is when we got the source data coming from Visa or MasterCard, and we were actually loading that into the expense management system, about 80% of the data payload was actually kind of truncated or dropped off on the cutting room floor. And only probably 20% of that data was going into the expense management system. But when we started looking at the data that was not being imported, it was things like the merchant date or timestamp of the transaction, zip code, address. And we started being able to map that up against when employees were traveling, or the tax team really cared about the zip code that the transaction occurred in because that impacted their tax filings. And so we were able to start using that data to drive other insights beyond just the expense management, right? There's a big payload there. We were able to do things like, what was our total spend at Starbucks or Uber or Lyft? And when that data is getting dropped or truncated and going into another system, then it's hard to have that visibility and then draw insights around that. And so I think that, and then you can use it for an anomaly detection as well. Were there outlier expenses that you wouldn't expect to occur on this particular card program? Or even the foreign exchange example I gave earlier, once we could start understanding transactions that were occurring in a currency other than the card issuance currency, and where that card was under an employee who was in a different legal entity, then we came up with a better overall card program because that eliminated FX charges. Initially we had issued cards all in USD, but we were sending them to employees in Canada and Australia. So every transaction created FX. And because that card program was under the US parent, then that created intercompany rebilling and recharges, which then created further FX. And it just, complicated everybody for really no benefit. And so by just having insight to the data, then we could make a more informed decision and set up the right program.
That's a really good general example. And specifically, it ties back to what Randy had said about enriched data. It's like you want more data, good data, because you can do more with it. And you were sharing examples of how people are like, I don't need that data. Let's drop it, like you said, on the cutting room floor. Like it's like we don't care about that. Well, you will care about that at some point, and it's almost free to store unlimited amounts of data that you may not need to use right now, but at some point there's a question. And so instead of a separate project to say, whatever the question might be, you don't have to go and say, let me source that data from 2 years if it's all available.
I think you raise a great point there, Craig, because there's a premise, there's sometimes a view of, well, I only want to store data that I know I have a use case for. But if you actually take your paradigm and say all data has potential value, but not all data will have value, that changes your view on how you want to store data and work with it. I may not have a use case today, but I may have something coming up down the road. And I'd sure like to have that data available to meet that use case or that reporting requirement or whatever it is, versus, well, I don't have it and I can't do anything with it.
Excellent. Well, we've come to the point in our episode where I ask for final thoughts. Ed, since you started off, why don't you go first? And then Randy, you can round us out. Any final thoughts that you'd like to leave with the audience?
Sure, Craig. I'd like to just really encourage Treasury and finance team members to really just spend a little bit of time just creating a diagram or a schematic of all your systems, the flow of data, and really just understand what your landscape looks like. And then spend a little bit of time saying, what if we could tie this data and this data and this data and draw better insights? And so just spend a few minutes on that. And if anybody has questions, we're happy to share some examples of what we do for our customers and how we document that. And I think it's a peer learning. We want to be able to share and help support people in their journey in managing the needs of their organization.
I liked how you said, what if? Now, you also mentioned when earlier. Should we also ask the question, when if?
When if? We're a data world, right? Everything's going data, right? You expect data on your phone, whatever it is, order food delivered, Lyft or Uber ride, book a hotel, airline. Where all of this is data, transactional data. Let's make more value for ultimately the office of the CFO.
Excellent. Randy, your final thoughts.
One, I would say I agree with Ed. It's certainly been interesting to work with customers where we will share what an ecosystem of data looks like for them. And it's, for many of them, it's the first time they've actually seen it. And it changes how they visualize, okay, what can we do? But what we find, and certainly from my selfish point of view and working with customers, what we really try to focus on is using a solution, right? And gaining value from it. And what I find actually is it's a virtuous circle or cycle. So the more consumption of data that there is, the more dialogue, adjustments, and even improvements in that data we find. And that's kind of crucial. You need to start the process. And so it's not a big bang approach, but one of the things that it's nice to be reminded of is as you go through that process with a customer and working with the data and starting to consume it, it drives more questions or more adjustments and improves sort of the utility of the data.
Excellent. Thanks, Randy. And thanks, Ed. Really appreciate your time talking through architecting your data ecosystem. There's so much there, and we just really got started, but thank you for your time.
You've reached the end of another episode of the Treasury Update podcast. Be sure to follow Strategic Treasurer on LinkedIn. Just search for Strategic Treasurer. This podcast is provided for informational purposes only, and statements made by Strategic Treasurer LLC on this podcast are not intended as legal, business, consulting, or tax advice. For more information, visit and bookmark strategictreasurer.com.